My name is Mbugua. I'm the founder and group CEO of Eclectics International, which is a fintech innovative company providing IT solutions for the banking sector, the microfinance, and the Saccos. Eclectics has been in business for the last 12 years and has been able to reach out to 26 countries, providing solutions in 26 countries. About 264 banks and Saccos and microfinance are using our solutions, processing close to 600 million transactions per month. It is estimated that our solutions have close to a reach of 200 million users who obviously will pass solutions through banks, and the banks own the customers. Eclectics has 207 employees, and it is today the largest software house in East and Central Africa. And for the last 4 or 5 years, we have continuously won the best innovative fintech in the banking sector. Beyond that, we are Microsoft Gold partners, we are Red Hat Gold Platinum partners, we are IBM partners, in this case of gold levels, and we have Oracle Emerging Partner of the Year for the last 2-3 years. Eclectics is a PCI DSS certified company, and therefore means that all our data and the services we offer are completely secure. Besides that, Eclectics is a CMM, which is a capability maturity model. It's an ISO model for software houses, on which we are at level 3, going to level 4 out of 5 levels in the maximum level, which I would say the Microsoft, the IBMs, the Oracles, and so on, they're all level 5. Besides that, I want to say that our main mission is to simplify lives digitally. Anything that we do and any actions that any innovative solution we come up with are purely to make lives easier using digital, and majorly mobile phone and other kind of solutions. The shared agency banking project in Uganda, what we call SABS, was the first and still remains the first in Africa to be rolled out by Eclectics International, and possibly no other has been rolled out across Africa, that drives unified approach of use of common technology platform by all banks and Saccos and microfinance in the country. In Uganda precisely, we signed a contract with the Uganda Bank Association, which is the body umbrella of all the banks, to provide a single platform for agency banking that could be deployed or has been deployed to serve the banked and the underbanked in that country. So I would say that the journey has been from 2017, it was the end of 2017 when we signed the contract, and the journey was not easy. I would just say that even the evaluation process and how we came to win is because we had been able to roll out not centralized solutions in other markets, but we had agency banking across different markets. But the integrations was definitely not easy because it was the biggest challenge. You're talking about over 200 third-party integrated systems in this. That means different core banking systems use different banks use different core banking system. Different banks use different card and switch management systems. The kind of back-end and payment gateways that all banks different use. And that came with its own challenges. And challenges would mean that it caused a delay in some of the integration, and also the understanding that the fact that it had not been done before, we were able to overcome those through by education and engaging with the customer. The shared agency banking first is to mobilize deposit and mean account opening for those that are not banked. As I indicated, that Uganda has 42 million population, about 4.5 million banked formal banking platforms on formal banks. Our estimate is that with Uganda being the youngest, having the youngest population in Africa, the median age is about 17 years. We believe that we have potential of about 15 million unbanked population that can be pursued digitally, because I said being youth means that they are technology savvy, and we are making sure that whatever technologies that we bring are adaptive to them. So services offered is obviously cash deposit, there's cash withdrawals, there's local remittances, there is person-to-person payments, there's bank to person, there's person-to-bank payments, there is bill payments, of water, electricity, Yaka, Umeme, water company, DSTV, Zuku, Star, just a whole list of services, obviously URA payments, among others, NSSF payments. All these services have been in production. Obviously includes buying airtime, among others. The whole bouquet of services. In other words, what we said is, what do people need money for? Physical money. And how can we allow, can we digitize that? So today you can go, whether you're banked or not banked, walk into an agent and be able to do these transactions. In terms of numbers, we have achieved greatly in the shared agency banking platform. We have over 8,000 agents that are already registered in the platform. We have 18 banks that are already live in production, with about 4 of them expected to be live in the next 1 month. We are processing about 400,000 transactions plus, almost 500,000 transactions every single month. And that total value is about 100 million plus worth of value that is processed through this platform. Besides that, we have been able to achieve close to 50% of the urban population reallocation of agents in those areas. And our plan phase basically is to onboard more agents outside the urban and peri-urban areas. I think besides that, I did mention that we have 18 banks are registered and 4 will be coming on board in the next 30 days. We are looking at tripling the numbers in the next 1 year to 2 years. We anticipate that the current number of agents, we have about 8,000 now, should be about 20 to 30,000 agents in the next 2 years. In terms of transactions, we anticipate that we can be able to possibly do 2 million to 3 million transactions during that time. But we also anticipate that we can be able to process maybe $500 million to possibly $1 billion every single month. The opportunities in Uganda is that we foresee, because of the young generation, as say the technology survey and so on, it means that you can be able to roll out technology-related solutions with a very quick learning curve to the extent that the product can take off much faster. First, and second is that the young generation, as I said, are able to adopt faster. They self-learning and can be able to take risks compared to the traditional, banker and so on. So I would say that because of that young generation, if somebody is able to roll out those kind of solutions, and solution would cover including the microinsurance, which currently, we are aware that Africa average insured population is about 2%. I believe that if that kind of product is embedded, it will actually be able to move to 5% or even 10%. Others would mean that solutions such as loans and microloans could be easily be adopted. E-commerce is a big thing, and we learned through COVID again that where there is no movement, being able to purchase and be able to enjoy a service remotely is also good. So I would say that Uganda still remaining the food basket for Africa. It still has the potential of not only rolling out these kind of products, but enabling many other things that can be done on top of that platform. When the government implemented curfew or movement restrictions, it actually meant that agents who would walk into their areas of business every day could not do that. It also implied that the customers who go into the agents to do cash deposit, withdrawals, and other payments could not move. So in other words, we were literally grounded. And that's why I mentioned when I was talking about the statistics and growth of numbers, the last 6 months between the month of March, April, May, June, all the way until August, we had a deep dive in terms of numbers. Saying that we also learned that we should not depend 100% on cash, and therefore allowing people to do transactions through their mobile phone, as I said, being able to move funds between one person to another, what we call P2P, or payments to government, payments to people, payments to billers, and so on, simplified the need for physical cash in those areas. So yes, another areas that were affected is the onboarding of agents. Our field officers in the agent network department have the responsibility of going to onboard new agents, as well as educating the existing ones, and as well as looking at the quality of the existing agents. With no movement, it actually meant that all that was put on hold, and there was no new agents that were recruited during that window. The rest of Africa, yes, we are only in 26 countries. We believe that we have close to 28 more countries to cover. And with that, it actually means that the same success story that we have had in Uganda, which I said is the first in Africa, and it has all the parameters of omni-channel, that capability using different devices and channels to be able to serve instant account opening, which allows people to be able to open an account regardless of where you are, remittance and money movement without necessary for physical, bill payments remotely, you can be able to do that in your own house, omni-channel for banks in terms of interoperability. Banks no longer need to have their own, they can share on a platform, and obviously reduces the cost. These are impetus, these are benefits, these are good points that every other government in Africa should be looking at. It is the responsibility of the central banks across Africa to embed and ensure that financial inclusion has been able to reach out. And inclusiveness means being available affordably and within value, adding value, that it be offering services that are required. So we are championing to roll out those across Africa. Obviously, we have started engagement with West Africa, the Francophone countries. We are already looking at that in Kenya. We are already doing that in Tanzania. We are already looking at that in Rwanda. We believe that we are already doing that. I think we should be going live any time in Zambia. We are already looking at all those, and we believe that this is a way to go. And Eclectics still remains the champion, point of reference when it comes into rollout of those kind of solutions.